Hey everyone, and welcome. All right, today we're going to jump into a really fascinating and honestly a pretty powerful investment tool that lets you get super specific with your strategy. We're talking about sector ETFs. So let's just get right into it. So let me ask you a question. When you hear somebody say the stock market is up or the market is down, what exactly do you picture? For a lot of us, it's just this one single massive thing, right? Well, what if I told you that's not really the whole story? Not even close. A much better way to picture this is to think of the economy like a professional sports league. Yeah, you have the league as a whole, but it's made up of all these different teams, right? Each one has its own players, its own strategies, its own winning and losing streaks. The economy works in pretty much the same way, and that idea is absolutely key to understanding what we're talking about today. All right, so let's get right down to it. What in the world is a sector ETF? And what does it have to do with these teams we're talking about? So here's the formal definition, the textbook answer, if you will. A sector ETF, or exchange traded fund, isn't just a broad basket of stocks from all over the place. Nope. Instead, it focuses, almost like a laser beam, on one specific slice of the economy, one particular industry. And boom, we're right back to that sports analogy. See, investing in a broad market fund, like an S&P 500 ETF, that's kind of like betting on the entire league to have a good season. But investing in a sector ETF, that's like putting your money on a single team that you think has the best players and the best shot to win it all this year. Let's make this super concrete. Take a tech sector ETF, for example. It would only invest in technology companies, so it would hold shares in the heavy hitters like Apple, Microsoft, and Google. This gives you really targeted exposure to whatever's happening in the tech world. But, and this last point is crucial, you still get diversification within that one sector. So you're betting on the whole tech team to do well, not just putting all your hopes on one single star player. See the difference? Okay, so if a sector ETF lets you invest in one specific team, the next logical question is, well, who are all the teams? Who's actually playing in this economic league? And here they are. This is basically the lineup. You've got your big names that get all the headlines, like technology and financials, but look closer, and you'll see all these other vital players. You've got healthcare, you've got energy, and you've got sectors like consumer staples. We're talking the companies that make the food and household goods we all use every day. Each one of these sectors plays a totally different game with different rules and different cycles, and you can invest in any of them. Okay, so we know what they are, we know who the teams are, but how do you actually use these things? How does this become a real strategy you can use in your own portfolio? Well, investors generally use them in three main ways. First up is to target growth. This is when you have a strong belief that a particular sector, say renewable energy, is just poised to take off. You're making a concentrated bet on that growth. The second way is to diversify beyond. Maybe you look at your portfolio and realize, wow, I have almost no exposure to healthcare. You could add a healthcare ETF to balance things out. And finally, there's tactical allocation. Now, this one's a bit more advanced. It's about shifting your money between sectors based on where you think the economy is heading. For example, in a recession, you might move more into defensive sectors like utilities or consumer staples. Each is a really powerful way to fine-tune your strategy. But, and this is a really, really big but, with that kind of focused power comes focused risk. You absolutely have to go into this with your eyes wide open. I mean, this quote from our source material really just hits the nail on the head. When you decide to bet on a single team instead of the whole league, yeah, your potential for a big win definitely goes up, but so does your potential for a big loss if that one team just has a terrible season. This slide lays out that trade-off just perfectly. On one side, you've got your broad market ETF. It's highly diversified across the entire economy, which usually means it's lower risk. On the other side, you have the sector ETF. It's all about that concentrated focus on just one industry, and that concentration is what gives it that potential for higher reward, but it also, for sure, brings higher risk to the table. So what does all this mean for you? Well, it really boils down to a few golden rules. First, and this is the most important one, sector ETFs should be used as a part of an already diversified portfolio. They are not meant to be your only investment. And second, because you're making such a focused bet, doing deep research into that sector and the wider economy isn't just a friendly suggestion, it's absolutely essential. So there you have it. You're no longer just watching the whole league. You now know how to look at the individual teams, the different players on the field. The conversation for you changes. It's not just, is the market up or down anymore? It's which sectors, which teams are looking strong right now? Thanks for tuning in.